Hello friends, this video is in the question and answer format and I will talk about the taxable and non-taxable income. All the questions are related to section 3 of the CPP exam, and we will go over the questions, and I have tried to put all the important things here, so let's get started. Question number 1. Are the moving expenses taxable to the employee? Before 2018, the moving expenses were not taxable if the certain conditions were met. But after 2018, all the moving expenses are now taxable to the employee, except if the employee is in the military field. So there is an exception for employees in military field. Otherwise, in all other fields, the moving expenses are now taxable. Where are the taxable moving expenses reported on W2? So on W2, the moving expenses are reported on box 1, 3, and 5. Box 1 is the federal income tax wages. 3 is Social Security wages. 5 is Medicare wages. And then they also go on box 2, 4, and 6, which are the federal income tax withheld from the income, and then Social Security taxes, and then Medicare taxes. It also goes on box 12, code P. And to remember P for moving, I just remember the word parade, and I associate moving with the parade. Sorry, my spellings are wrong. Parade. So if that makes sense to you. So next is, what is the limit for exclusion on employer provided education assistance in 2020? The 2020 limit for exclusion on employer provided education assistance is $5,250. They are excluded from employees' income. That means they are not taxed. But anything above that will be taxed. Are the employer paid group legal services included in employees' income? Employer paid group legal services, they are included in income, and they are subject to all taxes. What are the conditions for the employee business travel expense reimbursements to be excluded from income? Now, the business travel expense can be excluded from employees' income if certain conditions are met. And what are those conditions? First of all, the travel has to be away from home, and it has to be temporary. And temporary is less than 1 year. So anything that is less than 1 year will be considered temporary, and it has to be away from home. Okay. So, and the second condition is that this travel expense reimbursements should be under the accountable plan. The plan is accountable when there is a business connection for the travel, means you are traveling for some business purpose. The employee substantiates where he is making the expenses. So he will collect all the receipts and everything. And then the excess amount is returned within 120 days of receiving the statement, means receiving the statement from the employer that they need the excess amount to be returned. So these are the conditions. Only if all these conditions are met, then the travel expense that is reimbursed by the employer is excluded from income. Otherwise, it will be included. Next question. Under the fixed date method, when should the advance be given to the employee before traveling expenses incurred? So there is a fixed date method. Under this method, when should be the advance be given to the employee before the traveling expense is incurred? That's the question. The advance should be provided no more than 30 days. So it should be provided only within 30 days before the expense is incurred under the fixed date method. And the other conditions for this fixed date method is that the expense should be substantiated within 60 days and the return excess amount should be done within 120 days. So these are the numbers that you should remember for fixed date method under the traveling expense reimbursements. Are the employer provided meals and lodging excluded from employee's income? The employer provided meals and lodging can be excluded from income if following conditions are met. Conditions are meals and lodging are on employer's premises. Both the meal and the lodging should be on the employer premises. Second is that meal and lodging is provided for the convenience of the employer. And particularly for lodging, the employee is required to accept lodging as a condition of employment. If all these conditions are met, then the meals and lodging are excluded from income. Next question is, what is the maximum exclusion for qualified adoption expenses in 2020? Means how much maximum the employer can exclude. The employer can assist with more money, but the limit is $14,300 per eligible child for adoption. And the eligibility of the child means the child under 18 years of age. So any adoption assistance that is provided by the employer, $14,300 per child is excluded from the income. What are the withholding and reporting obligations for employer provided adoption assistance? So if the employer has provided adoption assistance to the employee, what are the withholding and reporting obligations? First of all, the adoption assistance provided by the employer, he doesn't have to withhold federal income tax on any of the amount, even if the amount exceeds the maximum dollar limit. It is subject to Social Security, Medicare, and FUTA taxes. So employee does not have to withhold the federal income tax. It will be paid by the employee. It will be reported on the employee on 1040 and it will be paid when the employee will file the personal tax return. But it is subject to Social Security, Medicare, and FUTA taxes. And because the employer is only liable to pay Social Security, Medicare, and FUTA taxes, so it goes on box 3, 5, 4, 6. 3 is Social Security wages, 5 is Medicare wages, and then this is the Social Security withheld, and 6 is the Medicare withheld. And it also goes on box 12, code T. Now, adoption, box T. Remember the word toddlers or teens or teeny tots. So all these will be good words to remember, that adoption assistance. So that's how I remember them. That this T code is for teens, adoption of the child under 18. Okay. Now let's go on to the next question. What kind of awards and prizes are excluded from employees' income? Any kind of award and prizes, if it's in the form of a cash, it's taxable. But if it's in the form of a non-cash tangible awards like stocks, bonds, etc., then non-taxable, it's based on the conditions. There will be some conditions, but they can be excluded. If the awards and prizes are under the qualified plan, then up to 1600 value, means fair market value, of the non-cash award is excluded from employees' income. What are the conditions for the length of service award to be non-taxable? Now we are talking about these conditions for each kind of award. So what are the conditions for length of service award to be non-taxable? First of all, it has to be non-cash. And second, the length of the service should not be less than 5 years. What are the conditions for civic and charitable award to be non-taxable? Now the condition for civic and charitable award to be non-taxable are: the recipient did not actively seek the award. Award is not conditioned on performing future services. And the recipient turns the award to the government or charitable organization. I mean, he doesn't keep the award, he gives it away. What is the special treatment for the prizes awarded to a retail salesperson who is paid solely on commission? Now, there is a special treatment for the prize awarded to the retail salesperson who is paid solely on commission. Employer do not have to withhold federal income tax. All other taxes are taken off. This is the same treatment as adoption assistance. So any prizes or awards that are given to the retail salesperson who is paid solely on commission, the employer do not have to withhold federal income tax, but he will withhold all other taxes and match them. Are the back pay awards excluded from employee income? In order to know if the back pay award is excluded, we should know what is the meaning of back pay award. Why is the employee getting back pay awards? So when the employee wins a lawsuit or a settlement against their employer for alleged violations of federal and state employment laws, example, the wage hour laws or anti-discrimination or labor management, etc., the amounts awarded are often considered to be back pay for wages that were unlawfully denied previously. Because they are wages, they are taxable. So they are considered wages that were not paid before, but now they are being paid. And because they are treated just like wages, so they are taxable. Only the amounts received related to personal injuries, if the award consists of the amounts that were related to any kind of personal injury or physical sickness, that will be excluded from being taxed. So this is important. Back pay awards are taxable, with exception that if it's for personal injury or physical sickness. Remember, it's only physical sickness and personal injury that is excluded. If it's emotional injury, it's still taxable. Okay. Are the awards for punitive damages taxable to employee? Punitive damages are when the employee is awarded for something in which a person died, or he complained and he got the award. So that is punitive. So that award is also taxable. Are the awards for emotional injury taxable? Emotional injury is taxable. Physical injury is not taxable. So the answer is yes, only awards for physical injuries or physical sickness are excluded from income. Emotional injury award is taxable. Are bonus and commissions taxable? Of course they are. Anything, first of all, anything that is cash is always taxable. Bonuses and commissions, they are considered supplemental wages, so they are also taxable. And actually they are taxed at a higher rate, which is a flat rate of 22%. Are the death benefits paid to the beneficiary included in beneficiary's income? Now, death benefit is something that if the employee died while working for the employer and the employer decides to pay death benefit to the beneficiary, will that be included in beneficiary's income? Okay, up to 5,000 is non-taxable. If the employer gives more than 5,000, it will be taxable to the beneficiary, but 5,000 is excludable from beneficiary's income. And the benefits are reported on 1099 miscellaneous. What is the 2020 exclusion limit for dependent care assistant provided by employer? Dependent care assistants, the exclusion amount is 5,000 for married filing jointly, and then 2,500 is for married filing separately. How is the fees paid to non-employee director treated for taxes? The key word here is non-employee. So if it's a non-employee director, director is not the employee of the company. He's non-employee. So if the person is non-employee, he will not get wages. There is no employer and employee relationship. He will get 1099 miscellaneous, and anything that is, if he's paid more than $600, it's reported on 1099 miscellaneous. The employer will not withhold any taxes. Okay. Now I think that's all. I will prepare more questions and I will post more videos, so stay tuned and go over this video. It has all the rates and limits for 2020. Sometimes I feel that reviewing it in a question and answer format is easier to remember than to go through the whole pages of the information. So hope this will be a good review for you. I'll see you in the next video. Goodbye.